Hey, what's going on YouTube? Welcome back to my investing channel. As usual, I'm your host Calvin, and today I'm going to be talking about my strategy at finding credit put spreads and how I kind of identify credit put spreads. And we're going to be looking at NEO today. So before we get started, if you could just show a little bit of support, scroll down, hit the subscribe button. I would really appreciate it. And next of all, I am not a financial expert, so please contact an expert or an advisor before you begin to invest. So with that being said, let's dig deep into it. So this week I have a 52/51.5 credit put spread that I opened for NEO. You can see that I'm currently up $33. And I put down a total collateral of $50 per credit put spread in an attempt to make about $8 to $10. So that's about a 18 to 20% return on investment, if you look at it that way. And the total collateral I put down was $250. My total return so far is 33. It looks like I'm going to be getting another couple of dollars. So you see there's a 2 cents difference, so another $10. So it'll be $43 for $250 collateral. So just slightly under that 20% mark, which is but higher than my usual expected returns per week of about 10%. So with that being said, let's take a look at how I found this. So first of all, I like to go look at TradingView. TradingView is a very interactive site that allows you to do a lot of charting. I've always enjoyed using TradingView, but the site is free, has a free subscription, or has a free version, which does give you a bunch of tools, although you will see ads. So the first thing I would like to do is draw a support line. So the first part I saw was I did this on Monday morning, so I saw support right here as one level. I also saw another support line as, let's see, right here. As you can see, there's it hits here, bounces, comes back down, bounces, comes back down, and bounces again. So I saw this as a level of support, and then this right here, I saw it as another level of support. Going further on, I also saw that these I also looked at the 20-day moving average, which was about $58. I looked at the 5-day and the 50-day. So with a moving average of about 51 for the 50-day, that's how I kind of got to the $52 put. The chances that it was going to be dropping below 51 and a half was pretty slim. And because of these the support line, to me it felt like it was a triple bottom along with this other little support right here, and it bounced right here, which is another part when which is about after this little bounce right here, that's when I saw double support, and that's when I really opened this position. So if you're thinking about doing credit put spreads, this is definitely another added benefit you want to use is to use support and resistance, but mainly support, so you do really have an idea of where the support is at for a slightly more volatile stock, so that you can get a little bit more premium. So NEO premiums netted me, or could net me, about 18 to 20% this week, and these premiums are pretty high for a weekly return. So what you want to do is really identify that support, and you want to go a couple dollars below that support. So in case that support breaks, you still have some breathing room, which is why I opened up a put right here. As you can see, let me see if I can draw this third line. As you can see right here, slightly lower, I opened it around here. As you can see, there was another little bit of support right here. It dropped below it, and then it bounced back up. I used that as my third level to kind of identify when I wanted to, or what target I should open this credit put spread. And another thing when you're opening a put spread to consider is you have to make sure that the premiums are worth it. I will not open a spread unless it nets me a minimum of 10%. Well, you might say, hey, that's a big ask. Well, I feel like the risk to reward has to be at least 10% to be somewhat justifiable. So I do look for that minimum 5%, 10%. And if I'm doing an iron condor, perhaps I could have gotten a little more, but I am pretty bullish on NEO. So if you're bullish on a stock, I suggest you doing a credit put spread versus an iron condor, because you don't really know how high it was going to push. I could have done an iron condor right here, but say I didn't have that confidence. So whenever you're not really confident about what's the peak of the company, I definitely recommend only doing the put side. With that being said, put credit spreads are an amazing way to generate weekly income. As you can see, I've been doing this an account challenge for a couple of weeks, and this is currently week 3. I started with $500 and I'm at $213 after 2.5 weeks of only doing spreads and condors. So, all right, guys, thank you so much for tuning in, and be on the lookout and stay tuned for my next video, which is really going to go into detail about how I pick iron condors. Thank you so much, and have a great one. Later, guys.